In today's video, we're going to cover the real estate trend and what's going on with prices. Are we going to have a crash or are prices going to continue to go up? I know a lot of people are calling for a real estate crash. Again, in my opinion, I do not think this is going to happen. Prices have come down a little bit since the peak during the pandemic, but this is completely normal. Every year, real estate goes through this cycle. So I'm going to show you guys on the charts what I'm talking about. But prices do tend to come down and then go back up. It's cyclical every single year. Real estate goes through this cycle, and real estate prices went up 20% year over year for 2 years during the pandemic. So having a little bit of a retracement is completely normal. And the biggest thing to keep in mind with the real estate, it's very simple: supply and demand. So although mortgage rates have been higher, which brings down demand, there's very, very little supply on the market. Again, it depends on which region of the country you're in, what state, what city. If you're in the boonies, yeah, prices I'm sure are going to come down quite a bit, more than a big city. If you're in LA, Bay Area, Texas, most parts of Texas, Dallas, Austin, Florida is still booming. Very desirable neighborhoods in New York, or even in the middle of the country where people are starting to migrate to places like North Carolina, Tennessee. These states are seeing a lot of influx of people. Idaho, we're seeing a lot of people moving to Idaho, North Dakota, South Dakota. Since the pandemic, obviously there's been a lot of migration. But anyway, let's start diving into the charts so I can show you guys what I'm talking about when it comes to home prices and how they are cyclical throughout the year. And a small correction that we're experiencing right now does not indicate a housing crash. The biggest thing is supply and demand. So we'll also look at the number of houses on the market. So here we go. This is Redfin's year over year. So March prices or March numbers just came out. They usually come out about 1 month behind. So this ends March 2023. So this is the March data point. So year over year, we see the median sale price is 400,698, down 3% year over year. But this is what I want to show you guys. If we go back in time, let's say we go even pre-pandemic. If we look at June 2018, the average home price, if you could see here at the bottom here where my cursor is. So June 2018, the average price was $292. If we fast forward a few months, that dropped to $278. So that's a $14,000 reduction. And again, it ticks up June 2019. So we see like June is kind of the peak of the home prices. So June 2019, you're looking at 302. Fast forward a few months to September, you went from 302 to 292, a drop of about $10,000. And again, if we look at same thing next year, June, again, we're getting to pandemic, so it's just going up, a little bit flat, up again. June 2021, we were looking at 387, huge jump. A few months later in September, went from 387 to 377. So again, cyclical. So right now, yes, we're a little bit low, but expect another peak coming in June of 2023. This 400 number is going to increase probably around 410 to 420 by June as things start to heat up. Summer. So think about it. If you're planning on moving, you're going to start listing your house in the spring. You want to sell during the springtime, you want to move during the summer, and you want to get situated because you want your kids to start at their new school at the beginning of the year. Do you guys remember when you were in school and there was a random kid who showed up in the middle of the year? It's kind of hard to get to know them. It's kind of hard to make friends. It's just awkward when a kid shows up in the middle of the year. So people don't like to do that. So that's why they're moving, they're selling in the spring, and they're moving to the new home in the summer just in time for their kids to get acclimated for the new school year. So we're looking at the average home sold is down 20% year over year. Now this is an important number because again, the number of homes sold is down by 20% because we don't have a lot of listings. There's not a lot of homes for sale. So we're actually going to look at that in just a second. But if we look at the 10 metro cities that are the fastest growing, Savannah, Georgia, 20%, Fayetteville, North Carolina, Florida again, South Carolina, Florida again, Florida dominating right now. But here's the housing supply. So this is very important. If we just break home prices and real estate prices down, it's very simple. Supply and demand. That's at the end of the day, no matter what interest rates are, it's going to come down to supply and demand. If we have very, very little supply, no matter what rates are, it's going to drive prices up. There's not enough selling pressure to lower prices to a point where we're going to have a crash. Now, again, there's some areas of the country you might be able to offer 100 grand, 50,000 under asking and get a property, but any desirable area in the US, that's just simply not happening. At my company, we're experiencing the same thing. Our buyers are mostly buying in Los Angeles, Phoenix, Arizona, Newport Beach, Orange County, California, and these are competitive markets. Homes are harder to get under contract because there's a lot of competition. We're losing out to all cash buyers, and it's just tough. So if we look at the charts for supply and demand, right? So this is the most important thing because as we can see, even though rates are up, we still don't have enough supply to balance things out. So this is according to Redfin. I've seen a lot of different numbers when it comes to number of homes for sale, but as of right now, we have 1.4 million homes for sale. If we go back to, let's say, pre-pandemic, right? We go July of 2019, we had 2.3 million homes for sale. 2.3 million. Now we're down to 1.4 million. So we've dropped about 1 million homes for sale, 1 million less homes on the market. And that is that's a drop of 44%. 44% drop in number of homes for sale. So no matter what rates are, that's going to drive prices up because there's just not enough supply. There's not enough homes on the market. A lot of people have locked in their interest rates at 3%. So people don't want to sell their home, give up their 3% and move to a new home where they're going to have to pay 6.5%. Now, the other thing to keep in mind is the mortgage rates are following inflation. As inflation goes up, mortgage rates go up. As inflation comes down, mortgage rates come down. I'm not going to get into that in this video, but I'll leave a link in the description below as well as right here. So you can check out my video talking about what mortgage rates are going to do and how that's going to affect the housing market for the rest of 2023 and 2024. So as I was saying, as inflation comes down, mortgage rates are going to come down. Now we have a tight inventory environment. So we already have very few homes for sale. In a tight inventory environment, if we have mortgage rates come down, that's going to create even more competition. Now, here's an interesting fact. Every 1% interest rates come down. So right now, for example, we're at 6.5%. If rates were to come down by the end of the year, if they were to come down to 5.5%, 1 million more people would be eligible to buy a home. 1 million. So we already have a tight supply. We have 1 million less homes on the market than about 4 years ago pre-pandemic. And now if rates come down because inflation's coming down, now we're going to have 1 million more eligible home buyers. So tight inventory, now you add more buying pressure because rates have come down. That's going to cause home prices to skyrocket in the next year. In my opinion, I think values and home prices are going to go up significantly over the next 1 to 2 years, especially as rates come down. So if we continue to look at this Redfin data, What else do we have here? So we have demand. This is the other part of the equation. The percentage of homes that have sold above list price is 28%. So that means over 1 out of 4 people are paying over asking to lock in a home. This is huge. So again, if you live in one of these competitive areas, if you're in the Los Angeles County, Orange County, Bay Area in general, or whatever state you're in, you know which areas are in high demand. I can't break down every city, but you guys know what they are. If you have to offer over asking, don't feel bad, because most people, well, over 25% are actually paying over asking for their home. So it's very, very normal in today's environment to go over asking. I mean, if we look at the peak during the pandemic, there's, almost 60% of homes. Even May of 2022, just 1 year ago, 60% of homes were going over asking. As rates went up, that number started going down, but we're still at 28% are going over asking. Now, the most competitive cities: Omaha, Nebraska, San Jose, North Carolina, Fort Wayne, Richmond. These are the most competitive areas. And if we look at migration trends, where are people moving to? Miami, Florida, top of the list. Phoenix, Arizona, where I'm living now, number 2. Las Vegas, Nevada, number 3. And closing out the top 5, we have Tampa, Florida, Orlando, Florida, and even Sacramento people are moving to. That's kind of surprising, and then Dallas and Houston rounding out the top 10. The top cities that people are moving out of, net outflow, 2 out of the top 3, California, San Francisco, and Los Angeles are number 1 and 3. New York is number 2. Again, this is not a political channel, but as you could see, some of the politics in some of these states that are leaning one way drastically are pushing people away and into more purple and Republican states. So anyway, that's it for this video. If you guys found any value, please like, subscribe. I appreciate every single like, every single comment. Thank you so much. I'm committed to putting out 2 videos every week. So to keep you guys updated on what's going on with mortgage rates, the housing market, Bitcoin, the stock market, the Fed. We have a debt ceiling crisis going on that's going to be coming due June 1st. So a lot of stuff to cover. Thank you guys for all the support, and I'll see you guys on the next one.